Tēnā koutou katoa. Nau mai, haere mai, kia ora tātou. Ko Jason Roberts tōku ingoa, he kai atu ahau I te waka of FinTech New Zealand. Kia koutou katoa, te ko tamanei, tēnā koutou katoa. Tēnā koutou, tēnā tātou katoa. Good afternoon, everyone. Welcome. Awesome to have you here. I see a nice crowd, and I'm rather glad we're not fighting fires and kind of running away. So lovely to have you here today. We've got a good couple of hours to spend some good quality time, not only hearing from these masters here, but also a bit of an update on FinTech from me, but also a chance for yourselves to get involved, ask curly questions, explore, check out, challenge, whatever it might be. But we really are interested in the future of FinTech and by inference, what that might look like for all Kiwis. I recognise also we've got quite a mixed audience here. I can scan and see a few FinTechers, which is awesome. But also recognising that within the FinTech world, it is quite wide and embracing. And if I look back in time, let me see, I think 6 years ago, FinTech back then in SureTech, actively partnered with the FSC to talk about innovation and tech, and it's been a really important theme that has only grown and expanded over those years. So today, I'm just going to start off with a general overview of what FinTech is, what we do, how to get involved, and start the conversation for these good folk. What I would like to do, though, is to invite all of you to use the Slido platform if you've got questions. Some of those we'll be able to answer while we're mid-session, if you like, and some of those also when we sit down for Q&A. So I'll just go for about 10 or 15, and these folk will do the chunky bits thereafter. So let's get cracking. Any quick questions before I get going on Slido or anything? No? Good. Right. So what is FinTech? Recognising that FinTech is kind of all-embracing, my core message would be is it's about thinking about innovation. And FinTech isn't necessarily just the tech. It's about innovative thinking. How do we engage with customers? How do we use technology and innovation? And then in the background, data, products, services, those elements that lead to a very digital experience that many of our customers now embrace, support, and seek more of. So it's definitely transforming the financial services. Just so happens I was writing some notes before using some old, I bet people haven't seen this, this shows my age. My very first job when I was at school as a pimply teenager was working in my grandfather's print factory, printing data cards. And back then, these little monsters, you used to have about, 10,000 of them to probably start an iPhone. But they used to run through, and the innovation and the technology has changed a great deal in the last 30, 40 years since I was playing around with them. But I think what was really interesting is we went through a really exciting innovation phase in the late 80s, early 90s. Many of us know about, of course, around FPOS. Whilst that was brought in to save money on cheques, it actually did spark a revolution. The problem is that New Zealand didn't carry on investing in that tech. Imagine what it might look like now with Payway, for example, being used with FPOS and account-to-account payments that is completely transformed. So one of the bigger messages out of today will be, what do we need to do forward? How do we invest? How do we keep the infrastructure going for a forward-looking, what we can refer to as a globally renowned FinTech nation? That's our goal. So, FinTech. For those of you who do or don't know much about us, we're a membership organisation with around about 200 members. That's everything from banks to regulators and SureTechs, FinTechs and so on, and a really active community. We are technically the 5th largest income earner for New Zealand, earning around about $3 billion a year in export revenue. Much of this coming from Xero, I've got to say. They're a pretty important influencer. Thank you, sir. You're keeping me employed. Mark's done an awesome job there as well. And also growing really fast. So the tech sector generally grows really well, but the FinTech sector has been growing on 24% year on year, or 32% according to the TIN report, but I still feel like we're growing pretty well. And it's carried on even through the economic challenges that we have now, albeit a bit slower than it used to be. We do have a good community. Despite our size, we probably punch a little bit above our weight. We have about 120 what I would describe as fintechs, and that embraces all areas from data providers, fintech payment platforms, insurtechs, and a bunch of others. It actually goes wider than that. That doesn't sort of sit with under the fintech world, but it is actually a very broad ecosystem. I have been describing 2025 as a watershed year. I've yet to work on the catch line for 26, but this little diagram, I hope, captures the essence of what a watershed year looks like. This is us letting go of what we've always had and beginning to embrace what's possible. And I'm just going to touch on some of these core elements and then leave both Niall and Mark to talk a bunch more about that. But if we look, sorry, I'll just check my screen. Yep. So if we recognise that we have a hybrid banking ecosystem, so in other words, we've been largely led by the banking sector, the likes of Payments New Zealand, the banks, Get Verified, and other providers who have come together and provided the beginnings of an open banking ecosystem. And all of us in this room have experienced what that might be, whether it's making a confirmation payee on our phone or some other experience through some provider. So it is definitely changing, it's definitely improving, and it has been largely, with the exception of with quite a bit of regulatory work sort of in the background, largely left with the industry. That is actually quite different from around the world. Most open banking, open finance ecosystems have generally been driven by the governments and then generally invested by them as well to shape what is helpful. New Zealand's had a different pathway. I'm not saying it's good or bad, it is what it is. The bigger question is what do we do when we go down an open data ecosystem, which we'll talk about later. Many of you are used to all of the changes, what I describe as business as usual, whether that's the triple CFA, the government changes that are coming through. There's a couple of good ones that I think are really good for us at the moment. The government has talked about, or is beginning to talk about, embracing electronic invoicing. Fundamentally, this is all government departments having to go on to a 5-day electronic payment cycle, and that is like a dynamo. It will start up and speed up payments throughout the nation. By the 1st of January 27, all 138 government departments or government agencies have to be making payments within 5 days. That is actually a really good thing if we're successful. What we need to do is get the API ecosystem running, and also those players who will benefit from the sped up payment environment. So there's some pretty good stuff happening. We've been hearing about the surcharging, kind of a bit of a storm in a teacup really. In the end, the retailers will pay for it in my personal view, but it is actually good to see some of the consumer work going on in the background. And then in the background, we've got work from the likes of RBNZ, FMA and so on, who are beginning to explore alternative forms of transacting or financial ecosystem work, stable coins, opening access to electronic settlement, central bank digital currency, which has been shown now around the world to largely sit with secondary capital markets, not so much with customers, and a variety of other areas that are coming through that we're all aware of. So yeah, definitely a hybrid banking ecosystem, and it'll be really interesting over time to see where the government and industry partner more to bring more innovation through. Which leads us into industry. So many of us are familiar with the likes of Payments New Zealand, been instrumental in building the payments ecosystem, and are now beginning to go down the next generation payments world of whatever that might need to look like. So it is encouraging to see where that is going. One of the big challenges we face is really about merging real-time payments, which we don't have at the moment and we need to have, and identity. And that really is essentially a wallet experience for us as individuals or companies to be able to use our digital ecosystem to make payments and know them are done in real time. As a very simple example, I sold my car over the weekend. I had to wait for 2 hours for one of the banks to talk to the other bank to see my money come through. And unfortunately, this poor person who brought my car wasn't allowed to drive away in it until my money came through, which is fair enough. So these are the sort of basic challenges that we want to solve at the moment. In the background, we have the bigger picture of how larger organisations are addressing technical debt and innovation and what that might look like for customers and having a better experience, or new products, new services. So there's definitely lots going on there, and we're beginning to see new providers coming in. And we're also seeing a changing collaboration ecosystem. So I think when we were talking as FinTech earlier, we were a bit of a bad word for a while there, but it is definitely changing. I think in the last year, we've seen 4 essentially banks acquire or work with or partner with fintechs, the likes of BlinkPay, CentraPay and a few others. And that is actually a really, really healthy sign. When we have that partnering going on and the larger organisations, institutions beginning to recognise the opportunity in partnering, that is a great thing for New Zealand. And we're seeing a lot more of that. We're also seeing more competition, and that is beginning to show in other ways, which I'll come to. What we do need is more sector certainty, in my opinion. Partnering is certainly a part of it. Venture capital is really, really important. So we have seen some big changes over the last couple of years during that sort of COVID period when everyone was jumping on the investment bandwagon. Things were looking pretty good for FinTech in New Zealand. I think there's around about $180 million raised. It shrank way back in the last couple of years, which I think really reflects both the maturing and some of the partnering going on, but also probably the fact that the times are tougher. There's not so much money floating around. That said, we still have new funds coming into New Zealand, which is really exciting. From a FinTech perspective, we've seen the rise of the FinTech Sandbox, which is fabulous to allow new innovation. And as an example, there's a FinTech called HomeShare. I was involved with a previous FinTech doing exactly the same as this fractional investment in a house, for example, and it just wasn't possible under the FMA rules, regulatory environment a couple of years ago. Now what you've seen with the Sandbox come in is the ability for new innovation, new products being able to explore with a bit of space to play and the opportunity to bring in new innovation. That is a really good thing. Of the current 6 companies who are running through the Sandbox program, only 3 of those are payments. The other 3 are in blockchain, HomeShare I mentioned, and 1 or 2 others. So it's actually a really healthy sign. So I think the role of regulators is really important in both putting the boundaries around what we can do, but also helping activate and innovate. We're also seeing new products, the pay-by-bank, account-to-account type products beginning to come through, new schemes, new digital banks, the neobanks. Now, a bank can't call itself anything other than a regulated bank, so we have the likes of Debut, Dosh, Revolut, 1 or 2 others who haven't yet got a banking license. They would love to call themselves a digital bank or a bank that is digital. We're still trying to get that ecosystem sorted out to enable new innovators and products and services to come in. We're looking forward to that. And then, of course, tokenized assets, stablecoin, blockchain, activation beginning to show itself in new products and services. And you will hear a lot more about that. There's certainly work going on in the background around particularly stable coins. So that's a really good thing. All of these things said, we have one really, really important problem. And I noticed a few of our speakers earlier on talking about this. Customers need to come first. If we're going down a digital environment, we have to think scams, fraud, customer protection, and ultimately trust. Some of the good things about fintechs is that often they don't have the same problems with trust and scams and fraud because they often have very modern tech systems, whereas the bigger products, the horizontal sort of providers, tend to have very fractionalized experiences with databases. So there is definitely opportunity there for us giving a better service to our customers and generating trust across whatever world of technical innovation that's going on. There is also a larger priority around government helping activate the essence of what customer adoption should be. So some governments around the world have said for us to get open banking working, and then by extension open finance, we actually need to do public communication programs. Problem is that people don't really know what it is until they experience it. Dear old Henry Ford many years ago said, you ask me what customers want, they'll ask for faster horses. So we have this kind of same paradoxical problem with the introduction and the growth of open banking. So there is a job here for industry and for government to come together. What has been interesting, and only yesterday I think it was, the announcement in Europe that they're going to expand the consent processes, the open data processes, to now go from banking and finance into an open data ecosystem. What GDPR did, despite all of its challenges, is that it got customers used to giving consent. It got them used to sharing data and giving permission, but also now allows the customer to be in control of it. So if I have my electricity account, my budgeting service, my Xero account, whatever platform I'm using, I now have control over the consent and the movement of that data. We only have that with a limited experience at the moment as of the 1st of December when we become an open banking regulated ecosystem. Once we start going towards this open finance, open data world, we'll need to be addressing this whole idea of consent a lot more thoroughly, and that is one of the big challenges coming around the door. Around the corner. So customer adoption is king, and much of what we're going to talk about today is helping customers get up and going. I won't spend too much time talking about open banking and CDR because that's definitely Niall's domain. But we're definitely seeing changes around the accessibility to the banking ecosystem and the expansion of interoperability and particularly integration. So there's a lot coming along, but really open banking is the start of this process of trust, the use of APIs and integrations and platforms, definitely digital experiences, but the proposition really is better value, improved, removing friction fundamentally and getting customers involved in a digital ecosystem. The open banking world, that first circle you see there is where we're at now. As of the 1st of December, 4 main banks now actually have by law to be a part of the open banking ecosystem. So New Zealand actually has a bit of an opportunity. Most countries in the world have the open banking, which is really limited to read access. That means you can read what's on your bank account to do something with. In New Zealand, we have the ability to enable an action to come off the back of that read. So we can then instruct a service to connect to or to use the data from our bank to then deliver a new payment experience. And when we get into agentic AI and a bunch of other areas that I'll talk about shortly, we actually have a really good opportunity in New Zealand to learn what's happening around the world. Yes, we're 10 years behind, but we do have the ability to leapfrog other nations, and I think it's actually a really good place. So what you're seeing with open finance now is moving into the KiwiSaver, the pension schemes, not that we call them pensions here, insurance in particular, definitely investment, and savings and loan products coming off the back of that capability. Minister Simpson has talked about CDR expanding to the electricity sector next, but really isn't much difference from whether that was in health, your telco, your utilities, those sort of areas. So we are going to see this really spread through transition of open banking into an open data ecosystem pretty fast, and it's going to be accelerated by what's happening overseas as well. My view is that we need to think consciously of having an open data ecosystem, and the parallel really would be thinking about what UFB meant for New Zealand 10 years ago. Once we got ultra-fast broadband laid down, it sparked up so many new services and products and capability. Open data is essentially that same conversation, and therefore what does this mean for NZ Inc? What does this mean for our political parties and so on? So I'm going to talk a little bit about use cases for open finance and where that might go and where the benefits might lie for your customers. So fundamentally, we're looking at this real problem. I'm not going to go into this, by the way. You can read to your heart's content. But really just identifying benefits and where that might lead to customer advantage. So customers have to benefit, and that might be to remove friction or to have a great experience of trust. If you can't remove friction, doesn't matter if it's a back-end experience or a front-end experience, you're not going to do very well as a fintech or as a mainstream provider. So it's definitely about finding opportunities to remove friction and making sure that a trust conversation is embedded within your relationship. Now, we have a great diversity of products coming through in New Zealand at the moment. I've got up on the screen here a number of examples that many of you perhaps are already using. I'm sure many of you are. Some of them are actually in this room or upstairs today. But funnily enough, I just saw as I was coming in here this snapshot from a screenshot of the top 10 downloaded apps in the financial services in New Zealand, which is kind of really interesting where they're beginning to hit now, because ASB Bank is number 7. So you're seeing all of these fintechs now beginning to have real traction in the marketplace, some of which isn't all that great for New Zealand, because we've got competitors flying into town, but some of it is because it brings diversity and a change. If it is that you want to find out more about what's going on, Akahu, who's one of our intermediaries that helps banks and third parties connect the dots and move data, put out quite a good report about open banking in New Zealand. You can get that from Akahu or from the FinTech website. And actually, really interestingly, Laurence, I've forgotten the surname suddenly, put out a master's thesis on the digitisation of finance in New Zealand, particularly with a lens on young adults, rangatahi and young adults. So we're talking people sub 30. And that's really interesting because this is talking about consumer behaviour, what young people are looking for, and the sorts of things that really matter to them. And even although it's 195 pages, it's quite a long report, but it has actually got some really good insights. So if you want to read that, have a good look. It's on the FinTech website. Quite handy if you're thinking as an organisation about where you want to go to from here. Funnily enough, I did some consumer research with my nephews out of the UK. They are, 25 years old, I think it is. Of their roughly 20 products they consume, only one of them was a bank. And that's really interesting because in the UK, you are really getting traction now for an economy that in the 10 years they've been running open banking has now begun to master. And I know that you'll talk more about that shortly. Okay, so looking ahead, I have my little pet favourites, the one that I'm really getting into at the moment, and I know that Mark will talk about it, is understanding the value and the possibility of AI. And that comes through in lots of ways, whether it's back end, front end, or whatever. But the big buzzword at the moment is what we refer to as agentic commerce, an agent who does your business for you as a customer. So I think this is really interesting because what you're seeing now is, unlike a customer who's going, excuse my blue shoes, these are called Adidas R71. They're a classic pair of shoes. I got them for $99, by the way. What is really interesting now is rather than me going onto a website, beginning to compare lots of different websites, doing some research with Adidas or whatever it is that I do, nowadays I can talk into my agentic AI platform and say I want the blue Adidas R71s, if that's what I want, from the best provider, ship the quickest to Tarangi, and I want size 12, whatever it is. This is an instructional environment using natural language, but then what's happening, of course, is that the bot, my agent who I've given permission to, is going and doing the purchasing, perhaps with permission to purchase and buy from probably another bot at the retailer end, who's then going to do my shipping and send it off. Now, that's got regulatory stuff, it's got payment stuff, it's got language stuff, confirmation pieces, there's all sorts of work in there. But what's already happening, and this is going to happen really fast in New Zealand, is that overseas, MasterCard and Visa have just released new products where you can use natural language instructions to take business, do business, and make a payment. Now, the reality is if you're a New Zealander, guess what? You're going to be doing business overseas with eBay or whatever provider it is. You're going to be exposed to that platform right now. And so what we're going to see, I think, is quite a big shake-up in the ecosystem in New Zealand due to international fintech innovation that we have the chance to embrace or the chance to ignore. What you got to remember is a bot doesn't use keywords, a bot uses SKUs, and that means marketing and organisations and the way they do their marketing have to change from keyword advertising and doing natural language advertising on marketing sites to now using searchable SKU numbers with the details of shipping, where it is, and all sorts of other areas. So we are going to see quite a big shift in the marketing space as well, in my personal opinion. Interoperability and integration. So if you're a provider, you're going to want to make sure that you're seen and found, and that means you're going to have to be interoperable across multiple providers and products and services, but also be able to integrate and to be seen, be found, and then do something with. So we're definitely going to see more of that going on and the rise of new services. Now, the big AI bubble, I'm sure we've all, well, many of us looking around went through the .com era. I personally used to buy and sell domain names. Cheeky, I know, but it worked pretty good for a while. And then I used to do crypto trading, which worked really well, although I pulled out too quickly and bought my new motorbike and then realised that it's quadrupled in value since then. But that's really interesting. It's really hard to predict what's going to happen, but clearly governments, nations, lots of industry are investing a huge amount into AI. The problem is that we may be on what they refer to as the J curve, so hyper and then down before it finds its place, like the internet did when it sort of went from hype and bubble, the .com period, to now, you know, it's part of our world and has led to a next generation of technology. So my personal feeling is we might be in for a bit of a price shock with AI. I'm sure you can give your thoughts on that, but it's really interesting. It will come through and be a big part of what we do. My other prediction will be to do with wallets and the merging of biometrics. I reckon we're in for a fight with a battle for the wallet. Apple Pay is 51% of all transactions online in New Zealand. Dosh is 1%. So we're going to see wallet providers coming through and really fighting to own that territory. Kind of environment that's really interesting. And the rise of stablecoin and tokenized assets, we've got providers looping together. This example here of Amazon and Walmart is an example of a closed ecosystem where companies are working together. You might imagine, for example, an insurance provider working with a payments provider for the products and services that go through that ecosystem. So there's lots of opportunity there. I only put this little snapshot up. I want AI to do my laundry and dishes so that I can do my art and writing. It's kind of interesting. AI is doing all of the wrong things. Can't do plumbing, which I would really like AI to do my plumbing at the moment at home. So a kind of interesting scenario. We've got lots of AI coming through, but whether or not it'll actually make a huge difference, who knows? We'll see where it goes. Government industry, obviously I mentioned it before, really, really important. This transition from open banking to open electricity and open data is hugely important. We are going to need to see much more collaboration between industry and government. And in my view, having the government support and invest in that. There are certainly indications, by the way, from both the ministries and the beginnings of whispers of, if we want customer adoption to be really successful, we're going to have to get behind it. And so we stand on that precipice of really embracing the opportunity or not. Hopefully we'll do what the UK has done and really make some great progress. We have a few other challenges. So looking ahead, what do we need to think about also? We have a fantastic but scary problem. New Zealand is a small country. Yes, we've largely been owned by Australian banks for a long time, but we are now seeing at pace new and very powerful fintechs parachuting into town and really cleaning up the competition. And I don't mean that in a judgmental way, but it is actually a bit of a risk for us. You know, Revolut and Wise, standout neobanks, who, because of 10 years ago, the UK government put a lot of investment in open banking. They have mastered their act. And when they come into town, they really do the business really well. As an example, I did the really dumb thing of buying something on Facebook. I got hooked up on one of those scams. Within about a minute, Revolut had closed down my card, refunded my money, told me not to be a silly boy any longer, and really helped me as a customer. That sort of experience I wouldn't have got from my own natural New Zealand bank. And this capability of a large-scale neobank provider is both a powerful lesson in why we need to wake up and smell the roses, but also what's possible when we do it really, really well. We've also got the data play providers, OB Connect and Engine, for example. OB Connect are behind, or Radium are behind the confirmation of payee that we all use for sending money to people. Only lives with banking at the moment, but imagine if that crossed into other areas of data sharing. So, they're international fintechs or data techs who are parachuted into New Zealand and enabled banking ecosystems. So definitely value, and that's where partnering comes together. So we also have the opportunity to leapfrog other nations, and we only need to look at India and Brazil as fantastic examples of what can happen when they really transition. The adoption rates over there are truly astonishing. So politics and priority, let's focus on real-time payments and get our national identity solutions sorted. Really, really powerful. We should be a digital economy, digital first, that's really, really important, and push through on those things that really will make a difference. I'm not sure that e-invoicing is going to be hugely impactful, but it is good. But a tailored licensing regime to allow new products and services to come through will be very, very helpful. And I have this little Martin Luther King shot here. We have a dream. So if we should have a dream to become a globally renowned fintech nation, question is, how ambitious are we? How can we work together, and how can we bring to make an impactful difference? So that's my little piece. Thank you very much. I have a really good question, Kim, that's too long for me to focus on, but I will come back to it. I'd like to hand over to my good friend, Niall. Niall's also on the board of FinTech New Zealand. I know he'll give you an awesome background on Xero and the world of open data, open ecosystems. And thank you very much. Over to you, young man.
Hello, everyone. Thank you for the introduction, Jason. Good to see you all. The subtitle of this session is Navigating the Future of Financial Services, but if I want you to go away with one thing from this talk today, is that this is now, or the very, very near future. This is happening around the world. In the UK, in this March, 1 in 5 consumers and 1 in 5 small businesses used open banking services. That's a fifth of the population just within that month. In July 2024, UK open banking had 10 million users attached to it. Now they've got 15 million. 5 million up, 50% increase in 1 year. In the US, FDX, the financial data exchange, had 74 million, 76 million customer connections through their APIs a year ago. Now it's up to 114 million. So this is growing fast, and adoption is big around the world, and it is obviously coming here. Plaid in the US is used by 1 in 2 adults in the United States, and they're one of the biggest providers of open finance services over there. If you're here, you may also, you're probably also aware, we've got the Customer and Product Data Act coming. There'll be regulated open banking in New Zealand in 82 days from today. It will just be a start, but this is coming, this is now. So I'm going to talk about why this matters, what it means, and what to expect, and also how you can approach open data and open finance. If you have any questions, do feel free to hit up the Slido or just ask directly. We have space for them. So a little bit about me. How do I fit into this world? I started out in the travel industry in the UK, where they have a thing called the Open Travel Alliance Standard, which is a data sharing standard. If you've wondered why you can't book a flight anymore without being offered a hotel, it's data sharing. If you've wondered why Expedia and Booking.com and Agoda all exploded, data sharing. If you've wondered why every single operator now offers every single thing, you can book a full holiday anywhere that you look, it's data sharing. The implementation of that standard has been absolutely huge. It was actually originally put in just to make electronic ticketing not terrible. You used to have to, you could get an e-ticket, wonderful, but then you had to go to the airport, queue up and print a physical paper copy, and they needed an API standard to be able to fix that problem across the industry. But then they had the API standard, and all of a sudden, all of these other things started becoming possible. And you've got to a world where any player in the market can offer literally any service from anywhere and clip the ticket and get a commission for selling it, which has been huge. And it has just greatly increased the range of products available, where you can buy them, and also the cost of providing those products has gone from being impossible to being very, very easy for suppliers. So after that, I came to New Zealand, spent 6 years working in banking at the most New Zealand of banks, where I learned a bit about the products practices of financial services. A lot of data moves around in banks in a lot of the same formats and the same ways that I'm going to talk about for public data. It isn't really a different model. It is just that internal-external line is a little bit different. And banks do make data available to third parties, and one of those is Xero, who I joined about 6 years ago. I head up the bank feeds team there, and my team are responsible for transaction data connections with banks around the world. In Australia and New Zealand, that is direct contracts, batch feeds that we've got that work very well. We'll talk a little bit about the technology later. In the UK, we're participating in open banking over there, have been for 5 years, very, very strong proponents of it. And also we are participating in the US system, which is a much more market-led system. And they've all got positives and negatives. But essentially, if you can name a bank in the English-speaking world, we've probably got a connection to it. We've got millions of small businesses, thousands of connections. One other thing in there is the FDX, the Financial Data Exchange in the US, is kind of like the Payments New Zealand API Center, but with a lot more Americans. Xero was a founding member. It's the de facto standard for data sharing over there for financial data. And as part of my role, Xero had a board seat there, and I was there to watch them pivot from being a not-for-profit to being a government regulatory organization, which is pretty fascinating. So what is open finance? This is my personal definition, but this is definitely on the shoulders of giants. I've pulled it from a bunch of different people in different places. That does mean I'm open to challenge, open to questions on it, and open to refinements. There is a lot sitting under there, though, so let's break it down. Sharing data is the cornerstone of open finance. It can be done by most banks today from a variety of methods. At a minimum, you've got things that are painfully manual, though, like downloading a transaction list or getting a bunch of statement files out of online banking. And that goes all the way to API connections that we'll discuss in a minute. Financial data, the basis is account and transaction data, which is what is the minimum viable open banking. But you do then move out into things like payments. As Jason mentioned, we have access to that here. The UK does. Australia haven't gone down that path yet. And then you can also go out even further into open finance, which covers things like insurance and investment products and different kinds of accounts and transactions. Informed consent is absolutely critical for data sharing, no matter how you're doing it. If you aren't a complete cowboy, which there are some, but not many, you need customers to know, what data am I sharing? Who am I sharing it with? How is this going to work? Bonus points if you have some sort of register to say, hey, these are the okay people to share with. Payments API Center run a register of those. UK Open Banking has a directory. So you can go and independently check, hey, I'm sharing it with a company who are okay by the government, who are playing within the ecosystem. And then security. Security is just an absolute non-negotiable for people. If people don't trust the technology, if they don't understand, if they don't believe it's secure, they will not participate. It just will not happen. This is people's financial data. In the payments case, it's the ability to move money. Nobody is going to do it if they don't trust it. The UK did a wonderful job of putting a huge amount into public promotion and awareness and understanding. But yeah, security is something that everybody in the ecosystem must be absolutely concerned about. So how is data shared? The original implementations of data sharing started actually in the late 90s with screen scraping technology. Screen scraping is essentially you send a robot to a website and it goes and pulls in information from that website. It's actually been very successful. It's, any price comparison website that you have out there fundamentally will be built on that. Google's index of the web is fundamentally built on web scraping. And now it's a cornerstone technology for the development of LLMs in AI. How is all of the data acquired for that? Typically web scraping. So it's been very, very successful. But if you apply it in a financial data circumstance, you run into a little problem. That where all of that data isn't on the public web, it's in online banking, behind a absolutely justifiable secure door. What that has meant is if to use that technology, customers need to hand over their online banking credentials for the robot to use it to log in, which raises, of course, all sorts of questions. This technology is still used in some places and in some markets, and it's essentially just where there isn't a better, more secure, more reliable version of the technology available. If there is another option, people will use it, generally speaking. If there is no other option, people will still use screen scraped approaches, despite the risks that are attached to it. We also have direct file feeds. Shout out to anyone from the banks in New Zealand. My team, Xero, has direct batch files with all of the banks here. BNZ have an API, full credit to them. Also in Australia for that. It's reasonable technology. It's quite secure. It gives customers their transactions from yesterday, but it's not very flexible. It's just, hey, here's effectively a daily statement of your transactions. You don't get any more than that. You can't interact with it. You can't see up to the minute. Also, consenting for a process like that tends to be very manual. It tends to involve signatures on paper in some cases. It involves moving personal data around, which is always something that we want to try and avoid. So enter API technology. We've probably got a pretty mixed group here. So for the uninitiated, an API is basically just an agreed set of a request and response. I send you a request in a format that we've agreed on, and you agree that you will send me a response in a format in the same format. So what this does is it gives everybody predictability. If you think in the case of open banking, a lot of the common ones are get an account list, do authorization, get account balances, get transactions. So I say, go get me an account list for this customer, having got permission. You send me back that account list in an agreed format. If you're a company that holds data, holds accounts, this makes life very easy. You build one set of APIs, everybody uses them, and they can essentially like it or lump it if they want to do something different. It's like, no, this is what we've got. You all work to that. It will cover the data that you need. And on the recipient side, third parties get the predictability of knowing, hey, this is what we need to build to. There are many standards around the world that are kind of coalescing to the same thing. Payments NZ standard, perfectly good. UK open banking, FDX, all also very much fine. That predictability does give you scale, though. It's, once a data holder has built it, they can just reuse and reuse and reuse and reuse, and the effort to add a new consumer is very, very small. And then, as I say, if you're all working to the same standard on the recipient side, it can be quite relatively easy too, that, hey, everything from every institution that we want to connect to, we will be dealing with the same thing. APIs are also very secure. We'll get to a demo in a minute, but they work on the basis of passing cryptographic tokens around instead of personal details. So the usual flow is if you want to sign up for an open banking connection, a third party, like Xero or anyone else participating, will collect basic details, figure out which bank you're going to, and point you to the bank, send you over to them. You then log in the bank's online banking. So you're never giving details to the third party. They never get access to it. You go into the bank, you choose which accounts to share, just usually a series of checkboxes. You hit OK. And what the third party gets is a token that they can use to refresh those transactions to get more data from the institution. They don't have your personal details. They don't have your account numbers. They don't have your login. They don't have your password. None of that applies. Still definitely security concerns that need to be factored in because you do get financial data. But just in terms of that consent, it is much, much safer and more convenient. I'm going to try and play. Oh, how's it not loaded? The video didn't work. It's all right. I was going to try and walk through, show you a demo of it. It is essentially the connection process is very, very simple. You open an app, Xero, whatever the app is. You say, I want to connect to bank. Select your bank. And then you go and just authenticate to the bank using whatever authentication the bank provides. So it'll be familiar, it'll be what you're used to. If you have MFA set up, it will be that. If you have biometrics set up, it will be that. It will just be the normal login process for you. You go and select your accounts, hit OK, come back to the app, and the data's there. It can take 60 seconds, absolute most, even including the redirects. It's very, very fast. And relative to some of the processes out there, if you think about anyone who's applied for a home loan or a credit card, the act of getting all of your transaction data together to be able to pass to a lender or pass to a bank or a card company can become 60 seconds. And you know it's secure, you know it's easy. The lender on the other end knows that this has come straight from the bank, so there's no risk of tampering. There's no risk of fraud within it. It is direct from the source. So where is open finance happening? There'll be a prize later for anyone who can name all of the countries behind those. I'll also give a shout out to the EU, who are sufficiently dry that they don't do logos. So this has had to come from the public web. Broadly, you've got two different approaches to open finance. You've got market-driven, which are broadly on the right of that the list there, and regulatory-driven, which is on the left. Market-driven, the US is the shining example of letting the market do its thing in most cases, and it also is here. It's also, though, in play in other countries like Korea and Japan and New Zealand, to a point. On the other side, the EU and the UK, PSD2, which started open banking in Europe and in the UK because the UK was part of the EU at the time and they've chosen to continue with it, is the regulated approach. It forced everybody to build APIs to make their data available, which was a very big game changer, although a relatively rocky process to get on top of. There's fuzz in between those, though, everywhere. In the US, there are rules being built around open banking that are piggybacking on the market-led approach. Likewise, New Zealand is kind of a hybrid approach. We do have the Customer and Product Data Act, but the standard that's being used is the API Centre, which is a market-led initiative. So these things do bleed together. Even in the UK, the initial open banking implementation was done by the CMA9, which is an organisation of the biggest banks in the UK by holdings. So both approaches have good and bad points. Market-driven tends to be more responsive to market needs more than anything, builds things that people will buy or will pay for, which is great. These need to be useful. People need to see the value. People need to be able to get involved. The problems tend to be that a bunch of companies in the same industry working towards the same goal in concert tends to get sticky for competition law. So it gets very difficult to move in a coordinated way as an industry with some of these things without at least having to go through a lot of legal red tape. The other thing is that commercial prerogatives eventually may pull in different directions. Ideally, if you're looking for an ecosystem of widely useful integrations and open finance and access to data, if a company has a big, strong market position, their whole purpose is to make the biggest return they can for their investors, and those two goals may be offset. On the government side of things, governments can be very slow. They can also drift away from what the market wants, so they can produce regimes that don't actually have a financial incentive to participate. The other element to that is certainty. Over in Australia, we've seen that they're on, I think, version 5 of the CDR rules now, and version 1 and version 5 are quite different. So if you invested in building an open banking-based service or a CDR-based service on version 1 assumptions, what you're dealing with now could actually just blow your business model up. And to participate, people are making investment decisions. People need to put money into building the other side of the integrations, and they need to be able to see a return. And the less certainty there is, the higher the risk, the less people are going to be willing to invest. So the less money will flow in, the less services will be there. Why is there demand? Basically because the alternatives without any sort of connectivity are bad. I mean, if you looking back at these things, a bank statement, a physical bank statement document or a PDF of it has most of the information you would need to commit identity fraud included in it. Statement transactions aren't exactly reliable and fraud proof and anything including spreadsheets as part of the process is just not going to give you accuracy. And then checks are kind of mind-blowing if you think about it. It's an IOU with your name, address, bank account details, and the details of your bank written on it.
Signature.
Yeah, and your signature. I mean, how did we ever survive with those in the past? Quick quiz, though. Anyone like to guess how many checks the US Federal Reserve settled last year? They'll be involved in kind of the settlement process. Anyone want to give it a crack? Just under 3 billion. Yeah. And that's the lowest figure it's ever been. 15, 20 years ago, it was more like 20 billion. And this points you really strongly to one of the reasons that open finance exists at all, is because these technologies are addressing that need. The US, where they've had this reliance on checks, is the home of PayPal and Venmo and Cash App. What are they addressing? They're addressing that problem. Many bank-to-bank transfers there, I have it on good authority, are one small bank writing a check and posting it to the other small bank, so it isn't any quicker. So that gap, that huge gap on underserved customers, is what drove the development of those services. You can see actually the uptake and the speed of development does tend to be related to how good the baseline is. So there, the baseline was terrible, huge uptake, very, very quick. Countries where the normal order of things was a little better, it's been slower. But I mean, fundamentally, if there's a way to use technology to provide a more convenient way of doing things, people will pay for it. If there's a way to use technology to deliver the same service at a lower price, people will do it. If there's a way to provide the same service at a lower cost, people will do it. And cost is a key driver for adoption here. You're saving someone money. Always with the technology. You could be saving an existing established business. You could be a new business offering a service at a lower cost. Wise, for example, that Jason pointed out, offers a service that a lot of people use, foreign exchange, but at a massively reduced cost from traditional methods. And open finance is about opening that up and letting as many people benefit from that as possible. So you do need to think carefully about the costs of open finance. That cost versus adoption thing is quite a delicate balance. International consensus so far is basically don't charge for transaction and account information. Payments, people are more used to charging for on a per transaction basis. So there's a bunch of different models out there that people are trying and experimenting with. But broadly speaking, the higher the cost, the lower the adoption, less people will get in there, and the less useful the network will be. And this dynamic drove the uptake of screen scraping technologies because it was a cheaper way and a better way to do the same things. It's also been driving the uptake of APIs, and it will continue to. One interesting sidebar, I mean, I'm an open banking nerd, so I know about this, but I don't know if anyone else does. Has anyone been watching what JP Morgan Chase are doing in the US at the moment? So they offered APIs for free to everybody. Pretty much anyone could connect to them for quite a number of years on a risk basis that, hey, we didn't want people screen scraping, giving away their open banking or online banking credentials. We want to give people another way. They've now turned around and started charging for it or proposing that they're going to put a fee schedule on it. And other banks are talking about the same thing. Where that gets really interesting is that it puts a price on the value of an alternative method to be able to do that. So it'll be really fascinating to watch that one, particularly in a market as big as the US. And this is companies like Venmo, Cash App who are using it. They've just put a price potentially on developing the next round of technology, which could be something along the agentic lines, for example. So it'll be really interesting to see how that goes. So what kind of services? Like, what's out there? What can people do with open finance? Financial management, it's very, very simple, straightforward, easy to understand one. Open finance ideally brings all of your financial picture together so that you can see it in one place. You get that for consumers. They tend to get budgeting, expense tracking, maybe a little dopamine hit when you reach a savings goal, apps for that. Working for Xero, I'll be totally open about my biases here. I think that it's a much bigger deal for small businesses than it is for consumers. Having a real-time view of the financial position of a business is fantastic. Being able to say, oh, I know exactly where my world is right now. I know exactly where my finances are. I know what my cash flow looks like. I know who needs to pay me. I know who I need to pay. And I've got services that I can just send people things to say, hey, could you please click this button and pay me what you owe? It's an absolute game changer. Small businesses can just be much more confident in running their business, make better decisions. And the tools have been available to bigger businesses for a long time, but just totally out of reach for small businesses. But now the UK is a wonderful example of it. You've got these tools that people can pay a couple of pounds a month to subscribe to, and a corner dairy can be running cash flow predictions and inventory management apps. 10 years ago, that would be absolutely unheard of and just impossible. So if you have customers who are small businesses, this is very much a good thing for them. Better survivability, better profitability, better decisions. I'll get off my soapbox. There's also a subset of financial management tools in there around savings and getting better deals and cashback, which is quite an interesting little one. Essentially analyzing your financials to tell you, hey, you're spending too much on these things, or you've got extra money at the moment, can I put it in savings? Or from scraping information elsewhere, I know there's a better deal than what you're getting on your phone, on your electricity, whatever it is. And combined with payment rails, you can actually take action on some of these. Some of these apps will say, hey, I'll move that money. Some of them round up the payment amounts for services and for things and take the difference into your savings. Credit risk and lending, another pretty obvious one. I alluded to it earlier. Getting access to people's transaction data in a reliable, secure, quick, efficient way is really, really valuable, and one of the big friction points for lending. It's a secure way to pass information around rather than having a physical document, mentioned earlier, the statement documents, or having to email secure, sensitive information. From the lender perspective as well, having that information in a computerized format means you can probably do things faster. and cut out some of your process around being able to needing to handle all of that information. Payments has been discussed a reasonable amount already. I won't go too deep into it. They are a very big part of open finance, the ability to pay and get paid quickly and easily through a new set of rails. The better technology can, in some cases, drive cost savings depending on what people are using to make payments at the moment, and that's on both sides. That payment providers and people using the service too. Validation of bank accounts is quite a fun one that has developed. I had an apartment in England, and for AML purposes, they needed me to identify myself and identify the account that my sale price would be paid into. And as I've said, I'm an open banking nerd, so I sat there and worked through in my head which API calls they were doing as I went through their process. But they used it to be able to say, yes, this is you own this account, the money is going to there, so if we find something problematic later, or if we have an issue later on, we know who to call, and we know where we can get you, and we know which accounts you've got at which bank. Really, really interesting use case for it. It doesn't do all of AML or all of identification, but it can be a tool that's useful in that space. Final use case is just aggregation services. Jason mentioned Akahu earlier, who are a company who basically do the integrations for you. These exist all over the world, even in market-led and in regulatory setups. It's actually more efficient for the entire market. So unless your business is really, really critical about connectivity, you should probably be buying that service from someone else. And a supplier gets to build it once and sell it many times. The overall economy, only one set of people are tied up building the integrations, and other people building apps, building services in financial areas can just focus on what they're there for, as opposed to dealing with connectivity. So it's just better for everybody. Absolutely critical part of the ecosystem. Yeah, the thing that it all hangs on is balance, though. You need a balanced regime, and everybody needs to get what they need, what they want out of it. Consumers need trust that the data is being handled securely, and they need a value. They need something that they're going to use or that will save them time. Third-party participants need to be able to make a profit because there's an investment decision in there, and also need predictability that, hey, today, tomorrow, next week, next year, I know what to expect so that I can understand where my business is going and it's worth investing. And then data holders need predictability about what's expected of them, what they need to do. Liability is quite a big concern in most regimes, getting a really crystal clear understanding of what happens when something goes wrong. It's one place where the UK, I can't believe we'll have this twice in one sitting, but GDPR was a really good thing. You won't hear that often, because as soon as the data goes into from one company to another, GDPR applies. At a bank, GDPR applies. Third party, GDPR applies. Anywhere else, GDPR applies. It's really, really clear who's in trouble if there's a problem, and there was no doubt about it at all. So yeah, it's been quite helpful for the uptake over there. Who's participating? So the obvious one is banks, but maybe not quite how you think. So banks do have to provide data, and certainly in regulated regimes, and they often do in market-led initiatives. But if you look at the list of participants in most of the big regimes out there, US and UK certainly, all of the banks are signed up as recipients as well. Anyone want to have a guess about why? No? How would it be, can you imagine being a bank and all of your competitors' financial data for your customers is flowing into your environment? If you control that customer relationship, you know everything about their finances, you know what to offer them, and while they're there in your world, you can try and sell something to them, and your competitors can't do a thing about it. You can own that situation. Think as well about converting, I hear banks in New Zealand like home lending, converting a customer from somewhere else. They spend 60 seconds connecting their accounts, and all of a sudden you know everything about their finances. And you're able to just instantly give them an initial answer on, would we give you a loan? It can open a whole bunch of doors if done right. Credit reporting agencies and lenders, active participants as well. Talked about that a little bit in terms of just the lending data collection. Credit reporting agencies as well are in the same game. One of them over in the UK has a wonderful little product that they've launched where if you connect all of your bank accounts to them, they will give your credit score a bump. So you will get a better credit score based on things like having a regular savings habit and other kind of good financial management and paying your bills on time, that they'll be able to see from that information that they wouldn't be able to account for with just the regular credit events, because it also happens outside that. So it's quite a clever one. And just access to better technology, more reliable, more secure, lower cost to run, generally speaking, in the long run, it is an advantage for them. Card schemes are players in open finance as well. Again, maybe not how you might expect. So both of the majors in Europe have acquired aggregators. So they own aggregation companies who are going out there, pulling in data and making payments for people. And the way that they seem to be positioning it is it's a different set of rails. It's a complementary product to the other products that they have. So they want to be in. And the volumes in payments are starting to stack up. I think in the UK, 8% of faster payments were on open banking rails, and it's growing fast. So again, they're participating effectively as data aggregators or data rails within that, with of course the added name brand recognition that, hey, this is Visa, this is MasterCard. We've talked about payment processors. I won't go too far into that, but it's a new set of rails where that is appropriate. And then one thing to consider here that cuts across everything: this isn't just startups. This is established organizations and startups, and all kinds of companies can play in this space. There are reasons for any company that moves financial data around to be participating. We can talk a little bit about them now. So what should you do? So, if you're in this space, open banking's 82 days away. What could you do? If you're in a business that collects financial data, that would be a very good start. If you collect financial data at all in any capacity, there may be something here for you. Could open banking speed that process up? Is there a better way to get access to that information? Could you get information that you can't get today, like the credit reporting agencies did? Bonus points if it's more than one of those. We also, in New Zealand, have the advantage of being, I won't say late to the party, but taking our time over this, because you can look at other mature markets and say, well, what are people doing there? What are they actually picking up? What services are being used, both by established companies and startups, to see where that could fit with you. There's also another part which I like a lot, which is take a look at your too hard basket. Like, what's in there that might be around data collection or data management or data transfer of bank transaction data or payments? What's been too hard historically? What's been difficult? What do your customers complain about having to do? And you have to shrug your shoulders and say, hey, this is the best way that we can do it. There might be another option. There might be another door opening. New Zealand's really well placed to pick up on this. We've got a populace who ran headlong into FPOS when it landed because it made their lives easier. There is a lot of potential in this technology. The standard's there because of the API Center. The regulations are in place. We've got a start date. So we're really well set. And then crystal ball gazing, what does the future hold? I always think back to the old joke that the stock market has predicted 9 of the last 5 recessions when I'm asked to look to the future. So, take this for what it is. There are a few different ways, though, that open finance is developing. Here and in Australia, it is looking at working outwards into that open finance range. So starting from the bank data, but moving out into energy, telecoms, other kinds of data to be able to get a rounded view of the world. In the UK, they're going a slightly different direction. They're trying to finish, I won't say, well, finish financial data. So they're pushing out into investments. Insurance data, I think, is on the cards there. And you could look at other kinds of financial relationship data being pulled in. Hasn't been proved either way. You could look at it and say, if you want a full position of someone's finances here, you really do have to include their insurance, their investments, their KiwiSaver. Why not do that? The other thing that is the subject of the second half of this talk is obviously AI. There are a lot of potential use cases there. First thing, training models. Open Finance gives you a whole load of high quality, accurate, detailed data about financial transactions and other financial behavior. Being able to build models based on that is really, really useful. The other side of that, the APIs to be able to take action and to be able to do things. If you have the case where Jason described, where LLMs and ChatGPT and those sorts of tools are going to do things for customers, having APIs for them to hit is absolutely critical. So if your customers are going to be using AI to interact with your services, which they probably will do whether you like it or not, if we're being honest, having some way that they can effectively try and work with your tools instead of trying to do the equivalent of screen scraping would be quite useful. Because as I say, a lot of the research, a lot of the data gathering for LLMs is based on screen scraping technology. So yeah, Open Finance can help with all of those. It will be interesting to see how it develops. We'll hear it from Mark now about how that goes. Thank you all for your attention. I'll hand over now.
Because of the fire or non-fire, I'm going to try and crunch a 40-minute presentation down to 10 minutes so that we can also have some time for good Q&A. So we can try and run these different themes together.
You got 20 minutes, no problem.
Yeah? Awesome. I'll slow down and talk slower. Okay, so who am I? I'm Mark Laurence. This is me. I'm not going to give you a big sales pitch, but I run my consultancy is called 10 Past Tomorrow. Also in the process of building, we are building a JV between 10 Past Tomorrow and Icehouse to create the very cute name A Icehouse. You can see where we got that from. This is essentially what's the link between the two? I don't build AI technology. I don't sell AI technology. I'm fundamentally set up to say AI is intangible, amorphous, intimidating, impractical, and hyped, and it needn't be any of those things. It actually is a really pragmatic and practical technology when there is AI literacy and AI skills in the mix, right? That's what I do, is try and take AI from there to there and make it meaningful, practical, pragmatic for you and your business and your operations and your people and your strategy, right? That's 10 Past Tomorrow, my agency that I've been running for 4 years. This is a JV with Icehouse, where they have been a client of mine for a while. They have now said, why don't we take that and scale it so that we have a national place for the small business community of New Zealand for AI transformation and guidance, right? So, as I say, we'll do this in fast forward, but really what I'm trying to replicate is kind of what I just told you. How do I best explain AI in a way that can make it practical and pragmatic to you? So what is it? How does it work? What can it do? What can't it do? How's the business world evolving around this technology? Some demonstrations and examples, and of course some Q&A, this is why I'd like to go fast. The juiciest part of a presentation about AI is the questions that come back from you, because then it's practical to you, right, and bespoke to you. So I always start, always with a new company or in a room like this with a poll. So please humour me. Can you please put your hand up if you've ever used an AI tool or platform? Ever. And now keep your hand up if you use AI at a minimum once a month, at a minimum once a week, at a minimum once a day, all day, every day. I could not live without it if you took it away from me. I have a paid subscription to an AI platform. Awesome. I've built a custom GPT or the equivalent. And I won't ask any of you, but I can explain the difference between a reasoning model and a non-reasoning model. Awesome. Cool. Good to know. It helps me pitch the conversation, right? I'm going to cycle now through, there's basically 4 themes to this presentation. There are a lot of myths. It won't surprise you. There are a lot of myths out there with AI. I'd like to dispel some of them from the individual level, which is AI can't do what I do. AI just sounds like a generic American robot. It's faster for me to do things the way I've always done it because AI doesn't know anything about me or my company. A lot of those myths come from, and this is part of the reason why I do that poll, a lot of these myths come from people who are using only the free tools in an illiterate and non-skillful way, right? The potential of this technology is here. The way we are using it as society, I'm not accusing you, but as society, the way we're using it is here, right? And that is the reason for a lot of the disconnect and a lot of the dissatisfaction around this technology. It's the reason why people say there is an AI bubble. There absolutely is not an AI bubble, except for there's a disconnect between the understanding of the technology and the actual power of it, right? So I also want to examine the pace of change. It won't surprise you to know this technology is rapid. You should know exactly how rapid and what that means for your companies. This is an intimidating statement, but it is true, and I see it on the ground, even in New Zealand. AI is tipping whole businesses and industries and business models upside down, shaking them out, pulling them inside out. It is here. It is not crypto. It's not the metaverse. It's not blockchain that's coming someday. It's here now, and the disruption is real, right? And that is an intimidating statement. But I also, the flip side of that coin is, this is the most powerful technology that's ever been built. It's also built fundamentally for you to communicate with it like you communicate with a human, right? Yes, there are tips and tricks and frameworks and etc. Fundamentally, if you communicate with it like a human, you will evolve with this technology very quickly and you will enjoy it, right? And that's why the disconnect is so frustrating. That's why this, the sectors of AI that have a vested interest in making it confusing and mystical and intimidating, it needn't be. As an individual, it is very, very easy and intuitive to evolve with the technology. The caveat to this is, because it's so powerful and because it's so easy to evolve with it and become a power user, it's precisely because of that, you give your people a bit of training and a bit of AI literacy, you're giving them the keys to rewire the whole organization. All of the standard operating procedures that your business is built on can be rewired very quickly. So it's easy to evolve as an individual user, as a power user from a technical perspective. What is hard is the cultural change and the leadership change that goes around that, around rewiring an organization. Yeah? So that's what I'm all about fundamentally. I believe this technology is not mystical. You can get, and this may differ slightly for your organization because of the privacy considerations that you should take into account, but you can, in general, across industries, any given business can get around 80 to 90% of what they need from AI for their people from out-of-the-box frontier solutions like ChatGPT and Gemini and Anthropic and Copilot, etc., right? And these tools cost you $20 a month American. Bill Gates, with $20 trillion gazillion dollars, cannot buy better AI than you can for $20 a month, right? So it is a democratized technology. There's a couple of really incredible research studies that I normally share. I'm going to share these and fast forward, Both were done by Harvard Business School. The first one, can I have hands up if has anyone heard of this one? Harvard Business School plus Boston Consulting Group. 753, this is 2 years ago, 2.5 years ago, April 2023. Harvard Business School got 753 Boston Consulting Group consultants, divided them into 3 groups. They all did the same exam. That exam was 18 individual tasks that a BCG consultant would do in their everyday work, right? 1/3 had no assistance from AI. The middle third got to use the paid version of ChatGPT, which at that time was GPT-4. That's now 3 generations obsolete, right? And the third group got to use ChatGPT as well, but they also got 5 hours of training on how to use it before they did the exam. The results were the 2 groups who had the use of AI performed on average, they did 12% more tasks in the time they had at their disposal. On average, they did each task 25% faster than the group without AI, and they were all objectively measurable tests. On average, they scored 40% better, right? This happens every time I present this slide, because we're New Zealand, but I get that reaction of like, and like this is stand on your chairs and applaud AI, right? This is like 3 years ago, if I said you can have a magic wand for $20 American a month that will help your people work, and I tell you this is like absolute minimum, 25% faster and 40% better, it's revolutionary stuff, right? And that is bare minimum. For some tasks, it's hundreds or thousands of times faster and better. This also should fascinate you because this keeps coming up in research, and I also see it with my own clients. Below average performers on average get about 3 times the benefit that traditional elite performers get from AI, right? If you are a leader, how tantalizing to be able to, with this technology, raise the standard of your whole organization to perform at a level that previously only your top 5 or 10% could perform at. The follow-up piece of research to this, also done by Harvard, this was this year, 4 months ago, this time with Procter & Gamble. Their thesis was, if we've proved this 2 years ago, now we've proved productivity, efficiency. What does that mean for how we build our organizations? What does that mean for teamwork, for collaboration, right? My dad was a high performance collaboration consultant for his whole life. He passed away 10 years ago. I wish that he was here to hear this because it fundamentally asks us to reconsider what teamwork means, what collaboration means, what teams look like within an organization. So again, 700 odd, 776 exactly, Procter & Gamble employees, a variety of tasks that they had to do which replicated what they do in their normal day. The way they put these 776 employees together was they were either a team of 2 humans or a team of 1 human plus 1 AI, or 3 humans with an AI, right? They all did the same tests, and overwhelmingly, the team of 1 human plus AI outperformed the team of 2 humans, right? Again, go and try and sleep on that tonight if you're a leader, or if actually you have a job. What does it mean now that human plus AI can outperform 2 humans? How do you rewire your teams? How do you change your hiring policies? How do you change your job descriptions? What does teamwork and collaboration mean? Do you have to take the AI out on team training day at the start of the year to Waiheke? My point with all of this is AI is for everyone. That's the implication. It's not just for your tech companies or your tech team or your coding department. It's for absolutely everyone. 2 buckets here. If you're a leader, please believe your people want you to train them to be deeply proficient and literate with this technology. There was a study that came out last month of Fortune 500 companies in the US. 40% of them have AI subscriptions, have officially purchased AI subscriptions for their people. But 90% of employees at those organizations said they're using AI. Whether you are buying subscriptions for your people or not, whether you are training them or not, they're using it, right? And if they're using it without training and official subscriptions, that is, particularly in this industry, very dangerous for your data and IP, right? If you're an employee, your customers want you to be using this, right? They want the most efficient, powerful, timely service possible. So I've talked about the pace of change. This is a general purpose technology. Congratulations, not many people in the history of humanity get to live through the creation of a general purpose technology. We've actually been lucky enough, we're like outliers, right? Not many people were there for the creation of fire. Then they had to wait a long time until the next general purpose technology, right? We have had arguably 3 in our lifetimes. This one is ready to go. It's like we've built all the infrastructure when we built the internet. It's supercharged, ready to go, and the biggest companies in the world are spending tens, soon to be hundreds of billions of dollars per year on this technology. So it is moving, and it's moving fast. And I'm going to show you an example of how fast. Please don't disregard the example if you don't make videos, and not many of you make videos for your job, right? I'm using this as the demo, and then I'll make my wider point. So the demonstration is creating video with AI tools. How do these things work? You type in, show me a family eating fish and chips on a beach. And it doesn't go and find a video on YouTube and bring it back and kind of modify it. It makes it out of thin air, right? These things are phenomenal. Now, this is what they first look like. This was the first generation technology. This is someone who wrote Will Smith eating spaghetti, right? It is a drug hallucination, basically, right? Versus, this is now what we have, and this is using VO3, which for those who use Gemini, this is built right into your platform for $20 American a month. You can now, the prompts here are American EV car show, right? Please take note of, this is not just now video, this is speech, lip synced to the humans, as well as you can start to see these things are starting to understand the law of physics. You'll see a guy who has a coffee cup at one stage. Listen, and I hope the speakers pick it up. When he puts the coffee cup down, you hear it down here, right? These things are, we've gone a long way since Will Smith drug hallucination.
Welcome to a non-existent car show. Let's see some opinions.
I mean, man, the acceleration is crazy. You look far, step on the pedal, and you are there.
I feel safe with him in an SUV, and it seems to be like the right type of car for him.
I think the range is only going to get better. Sorry.
We don't want to drive gas cars anymore.
Yeah, no more gas cars.
You can see I'm kind of a misfit here, but don't tell anyone. I've just bought an electric car.
I think it's really great for families.
Right, you get the idea. None of those people are real. That place is not real. Hard to tell. Some of it, you're like, is that just weird technology, or are they Americans? And there's a blurred line there. Sorry if there's any Americans in the room. But my point is this, right? To go in New Zealand, especially because of our time zone, you can go to bed. We literally can go to bed, and there'll be a facet of your work that AI is laughably bad at, right? Like if you were a video producer, you're feeling pretty safe when Will Smith is state of the art. We can literally go to bed and overnight you have a jump from there to there. And I call that the step change effect, right? And this is what I want people to know about AI. It's not linear. You know, you could have missed the first 20 years of Microsoft Word and someone gives it to you and you jump straight in, right? Easy. You can even kind of miss you could have missed the first 20 years of solar technology and you jump in there, but you don't want to miss that part, right? You cannot miss 2 or 3 of these step changes. It's going to be too hard to catch up, right? Jason's already talking about agentic AI. We're knocking on that door. You want to know the fundamentals and have your business wired around the fundamentals before this next step change comes, right? So I said I had a wider point than just AI video. Where else might we see these step changes within your world? I collected a list of the top 50 tasks and processes that a wealth management company might do. And I understand you're from various different flavors of the industry, but this is the top 50 tasks a wealth management company might do repetitively, regularly, routinely, manually, right? The step change is here. There is AI that can help you either do these things or do it for you. And the power of the technology to do it with you or for you is going at step change, right? Please do not miss this technology. And that's implication number 2. Implication 1 was it's for everyone. Implication 2 is it's fast. And it's asking you to be fast too. Not asking you, because it will go whether you come or not. It is requiring you, yeah? If you ever are working with someone in the world of AI and they are not very focused on the risks and concerns of this technology, please be concerned yourself, because either they have a vested interest in you or they are ill-informed themselves. To have a responsible conversation around AI, we must keep an eye on the risks and concerns, and it's not Terminator is coming. It is, and like if I had more time, I'd go into these, but I guess what I'd shortcut and say is, if you're sitting here and you're thinking, yeah, but what about with AI? I've heard this, or I'm concerned about this. Raise it in the Q&A, because those conversations are just as important as the potential and the opportunity of this technology, right? But they make things up that inherently full of all the bias that humans have, because they're trained on everything we've ever written and recorded. They need good data, as Niall said. There are legal concerns, copyright concerns, mountains of ethical concerns, and of course, what's it going to do to the workforce, right? I spend every day tiptoeing between like the fascination of this technology and being terrified of it, right? I won't show you the full demo, but it is useful to think of AI as you can deploy it in 2 ways in your company, right? This is where most people default to when they're learning about AI. They think it must be a push the button and it does everything for me. In the AI parlance, it's human out of the loop. You press the button and it gives you your mocha flat white with a twist of almond. You have no part in the process, you just pick up the output, right? There is a big place for this within any business. This is what you rewire your whole, your big chunky standard operating procedures. Often that they're cutting across departments, or you're moving data from here to here and software to software. That's what you want this for. However, this is where you start, and this is where you get probably your first 12 to 18 months of gains within a company, is working with the technology like you work with a coffee machine. The line is blurred between what the tech is doing, what ChatGPT is doing, and what I'm doing, right? If I go back through a whole workflow, There's a really blurred line between what that AI has done and what I've done. This is where the big gains are for the first 12, 18 months of a company's work with AI, right? But it doesn't happen just from the CEO buying 50 ChatGPT licenses and saying, cool, we're doing AI. It comes from a dedicated program of literacy training and skills training. And that's what I do. That's my world, is doing that with companies. I see it, it works, but it's an investment. It's also an investment in the cultural change around AI, leadership change, management change. The technology will ask you to rewire all those things. So if anyone would like these slides, I'm going to give you my contact details. Send me an email, send me a LinkedIn, and you can get this. This is essentially the 5 strategic building blocks of what a company is doing right now in 2025 if they're wanting to be AI emergent and AI adaptive. You'll notice it starts, the whole foundation is literacy training and skills training for every single person in your company, right? Remember implication number 1, that AI is for everyone. It is, but they all need training from your like fresh-faced new grad right through to your CE, all of them, yeah? So this is where I'll leave it. This is the image that I have to summarize it. I love this technology. I am fascinated by this technology. I'm an entrepreneur, I'm a business person, and so I'm fascinated by what the technology is asking of our systems and of our people and our strategies. As much as I love the technology, I love people more, right? And so what I believe is we have this opportunity with the technology not to throw the baby out with the bathwater. Every single business, yours included, will have really strong elements of it's built on relationships and it's built on human connection. And there are things that humans can and should only do that we don't want to offload to AI. I believe that, but everything else around it can be supercharged by this technology, yeah? And so that's my hope, is that this is where we're going, is this weird new world over there that looks like this one, but it's infused with this incredible technology. You get there through a combination of a couple of paths. Part of it is AI augmentation, where you're working with the tech. Part of it is AI automation, where it's offloading and doing whole piles of work for you. But the most important part is to keep that person right in the center, and that is the challenge, and it's also the opportunity. So with that, hopefully the idea is that we can hopefully pull all this together, and if you've got questions that cut across the 3, that will be awesome.
Thank you very much.
I'm not sure if, this is going great. Okay. Hey, that's really awesome, Mark. Thank you. I've got to say, I'm a bit terrified about the whole thing. And I'm going, my God, I was trying to use, dare I say it, ChatGPT last night to give an example of parachuting in fintechs, and I got a really bizarre thing, which was like, I can't use that. But it does bring up this whole point of how you train and prompt. But the thing that really strikes me is, my God, what does this look like for these organisations? And I know there's a spread mix here, but how do we bring this into our staff more? How do we have governance? How do we make sure those solutions that we provide to customers are actually trustworthy and match some of our regulatory requirements and challenges? And I know I've got some other questions coming through here, but just to start us off, what are your general thoughts about how organisations, I know you mentioned about how you get started, but there must be some very practical challenges or things that we're going to have to address in the sector.
Yeah, well, I think what you need to put a highlight through in your sector is the really obvious one, which is data privacy, right? And that's relevant to any organisation working with AI. However, it's especially for you who you're working with not just private data, but PII, right? So that's something that I would say is of particular importance in your industry. However, it is manageable. And one thing that I notice is companies hold AI software up in a different lens than they inspect all other software that they have, right? So I guess I'd summarize it by saying these companies are spending tens and hundreds of billions of dollars on this, on building this AI. They know they will not recoup their costs unless they are not just seen to be taking data privacy seriously, but they actually are. And so, as an example, within ChatGPT, it is literally a one click, and you can lock that down so you are private and secure. And that works, right? I could tell you the technical part of it, but that works. However, we don't ask questions of, like, Niall opens his computer with biometrics. Nobody asks, where does that data go? Everyone's like, well, what about OpenAI? But where does that data go? So what I'm saying is there are solutions here. Clearly for banks and insurance companies, et cetera, you need to take more robust actions than just the one click in ChatGPT. So that's the specific answer. At the wider question, where do you start? It must start with the senior leadership team. You cannot have AI adaptation and AI evolution unless it's being led by a senior leadership team that are AI literate and AI skillful. And so to reinforce that, 18 months ago, I actually rewired my whole delivery model to enforce this, and I don't start working with a new client unless it's first a 1-month program with their senior leadership team. And what that does is it accelerates, really, I see it, a company will get, in 2 months, they'll get to the same place that used to take me about 12 months to get them there, because it's being driven by a leadership team who know how to use the tools and know how to drive change. So that would be my first tip. It starts with the senior leadership team.
Awesome, thank you so much. Now, we've got a bunch of questions coming through. I think we might just hand over to you a little bit here, Niall, because we've got Xero, who have obviously been exploring and dealing with a lot of AI, I imagine, without giving away any trade secrets. I mean, how do you think a large organisation like Xero is beginning to take up the challenge of not only staff, but also your customers?
Yeah, I mean, very seriously, and from the top as well, to Mark's point. How much can I say? We've been very public about our AI ambitions. Our conference, XeroCon, was last week, where we talked about how we're using it to deliver new things to customers that just weren't possible before. But education is a huge part of it. We're taking internal education very seriously. They're very, very comprehensive programs, including safety, but also how to use the tools. One thing that might not be obvious as well is that you can get internal implementations of AI tools and models. So many of the big tech companies will have their own internal version of Claude or Copilot or ChatGPT, depending on who they're working for, which puts a walled garden effectively around all of their data and says, hey, our model can see this, but nobody else can. It doesn't go over to the States. It isn't shared with anyone else. So you can put controls like that in place so that you effectively put a border on where your data can go, even within that.
Now, that's actually important. There's a question there from Nathan around the risk of catastrophic data leak, which is both, it looks like if you can wall it off internally, that's one space. But when a lot of data has been consumed from lots of different spaces, how do you manage that?
I can talk to that from kind of a financial data and open data ecosystem perspective. AI might need a second answer on it. Really, the risks are pretty much the same as they are today. The technology is different, but people are going to try to access financial data. They're going to try to access the ability to move money. The risks aren't different. Usually, though, to be honest, particularly with API technology, the easiest way to get in there is still a human being. It's still social engineering, it's still phishing, it's still that kind of approach, rather than trying to brute force the technology and break a bunch of cryptographic tokens. So you have all of the same risks that you would have for a bank running, access to their own internal systems, all of the same accesses. I mean, frankly, open finance doesn't give you anything more than access to online banking for a bank would. And if you're using the same credentials, it's probably easier for a fraudster or a bad actor to just log into the bank directly and move money around, or try to do it through there, depending on how good the fraud systems are at catching it. So it is a case of trying to find the weakest point, but it doesn't fundamentally change the risks or the measures that need to be taken to protect data.
Oh, awesome. Hey, look, I'm very conscious we're the last act before drinks, so we'll just have one more question, and then I'll probably just leave it with you, Mark, to close off with us. But what do you think within the financial services sector we should really prioritise? Is it customer first? Is it organisational? Is it governmental? You know, where should we sort of set our focus going forward?
This is the same answer across industry, and I actually would extrapolate it out and say, like I also work with a couple of the universities. You get this question from parents as well. It starts with AI literacy and skills training, and I'm like super impressed to hear that that's what Xero are doing, because if you go back to that slide of 80 to 90% of what you and your company need from AI can come from this out-of-the-box technology. It's the most brilliant and weird and unlike anything else technology that we've ever had, and no one grew up with it, and we're not AI literate from young people, and we didn't get taught at university, and the capability is there, the capacity to rewire your organization is there. Either you're going to do it or competitors will do it, but it needs to be trained. Your people need to be trained, not just to use the tools, but to understand how the technology works, and therein lies the challenge, but also the opportunity. Yeah.
Fantastic, thank you. Hey, look, I'd like to say thank you, everyone, for coming along today. Mark Laurence from 10 Past Tomorrow, thank you so much, Mark. And Niall Convery from Xero. Awesome to have you all along. Thank you so much. Cheers.